Hello everyone. Welcome to this session on AI versus cybercrime, the future of fraud detection in FinTech. As digital transactions grow, so do cyber threats. In this video, we'll explore how artificial intelligence is revolutionizing fraud detection, helping financial institutions stay ahead of evolving cyber threats. From machine learning to real-time anomaly detection, we'll discuss the cutting-edge innovations shaping the future of FinTech security. Stay with me as we uncover how AI is redefining fraud prevention. In this video, we will explore introduction. As financial transactions become more digital, cybercriminals are also becoming more sophisticated. In this session, we'll explore how AI is transforming fraud detection in the FinTech industry and shaping the future of cybersecurity. The role of AI in fraud detection. AI is revolutionizing fraud detection by analyzing vast amounts of data in real time. Unlike traditional methods, AI can quickly identify suspicious activities, detect anomalies, and adapt to new fraud techniques, making financial systems more secure. AI techniques in combating cybercrime. AI-powered technologies such as machine learning, anomaly detection, and behavioral biometrics are playing a crucial role in identifying fraudulent activities. These techniques help financial institutions prevent cyber threats before they cause significant damage. Fraud detection in FinTech. In the FinTech sector, AI enhances fraud detection by preventing identity theft, reducing false positives, and enabling real-time transaction monitoring. This ensures a safer and more reliable financial ecosystem for businesses and consumers alike. The future of AI in fraud detection and cybersecurity. As cybercriminals evolve, so does AI. The future of fraud detection includes explainable AI, AI-driven automation, and blockchain integration to enhance security. AI will continue to play a vital role in strengthening cybersecurity in financial services. Conclusion. AI is a game-changer in the fight against cybercrime. As technology advances, financial institutions must embrace AI-driven solutions to stay ahead of evolving threats. Introduction. Let's discuss what artificial intelligence or AI is. AI is the application of human intelligence through software, enabling more accurate and efficient decision-making. In today's financial landscape, pre-trained AI models are widely used to assess loan applications, ensuring that loans are disbursed to the right customers based on data-driven insights. Simply put, AI is a technology that enables computers to perform tasks that traditionally require human intelligence, such as learning, problem-solving, and decision-making. Cybercrime encompasses illegal activities involving computers or the internet, including hacking, malware attacks, phishing, and identity theft. For example, if an employee receives a fraudulent email disguised as an IT support request and unknowingly enters their login credentials, cybercriminals can exploit this information to gain unauthorized access to sensitive company data. Financial fraud refers to any deceptive activity or scam designed to steal money or sensitive financial information. It can impact individuals, businesses, and financial systems through tactics such as phishing, identity theft, and fraudulent transactions. Example, a hacker may send an email impersonating a bank, requesting login credentials. If an employee unknowingly provides this information, the hacker can gain unauthorized access to company funds or confidential data. Why it matters? 1. Leads to significant financial losses for businesses. 2. Damages reputation and erodes customer trust. Preventive measures. 1. Implementing employee awareness programs and fraud detection training. 2. Strengthening security protocols for financial transactions. Let's explore some common types of financial fraud and their impact on businesses and individuals. 1. Unauthorized transactions. Imagine waking up to find money missing from your bank account due to hacking or the use of stolen card details. 2. Identity theft. A fraudster steals your personal information and takes out a loan in your name. You remain unaware until the bank contacts you. 3. Money laundering. Criminals disguise illegally obtained money by routing it through fake businesses, making illicit funds appear legitimate. 4. Phishing and spoofing. You receive an email claiming to be from your bank, requesting your login credentials, but it's actually a scammer attempting to steal your money. 5. Investment fraud. Fraudsters lure victims with promises of high returns, such as Ponzi schemes, only to disappear with their investments. 6. Insurance fraud. Individuals falsely claim damages or stage accidents to receive payouts from insurance companies. Each of these fraud types poses serious financial risks, emphasizing the need for awareness and robust security measures. Impact of financial fraud on the fintech industry. Financial fraud presents a significant challenge for the fintech industry, affecting both financial stability and customer trust. Firstly, fraud leads to direct financial losses. Companies suffer from stolen funds, chargebacks, and reimbursement costs. Additionally, businesses must invest heavily in fraud prevention measures, adding to operational expenses. Secondly, customer trust is severely impacted. Frequent fraud incidents erode confidence in financial institutions, with a recent survey revealing that only 54% of people globally trust these institutions today. A decline in trust can slow down business growth and adoption of fintech services. To safeguard both revenue and customer confidence, it is crucial to implement stronger fraud prevention strategies and continuously enhance security measures. Additional risks of financial fraud. Financial fraud not only causes direct losses but also brings several other risks that can impact a company's long-term success. 1. Regulatory penalties. Failure to comply with anti-fraud laws can result in heavy fines and legal consequences, damaging a company's reputation. 2. Increased operational costs. Fraud detection requires significant investment in advanced technology and skilled professionals, raising overall expenses. 3. Hindered innovation. Companies often shift their focus from developing new products to fraud prevention, slowing down innovation and growth. 4. Declining stakeholder confidence. Investors and stakeholders may lose trust in a company's risk management capabilities, affecting funding and valuation. To remain competitive, businesses must implement strong fraud prevention strategies that balance security, compliance, and innovation. The role of AI in fraud detection. How AI detects fraud in real time. Just as we sense when something feels off, AI can identify unusual patterns in financial transactions. For instance, if a customer typically makes small purchases but suddenly a large transaction occurs from another country, AI recognizes this anomaly and flags or blocks it instantly. By analyzing transaction behavior in real time, AI helps prevent fraud before it causes damage, ensuring enhanced security for both businesses and customers. How AI and data visualization enhance fraud detection. AI and data visualization make fraud detection faster and more intelligent. Think of AI as a security camera that not only records but also instantly alerts us to suspicious activity. In financial transactions, AI continuously analyzes patterns, detects anomalies, and prevents fraudulent activities in real time. Meanwhile, data visualization helps businesses understand fraud trends, enabling quick and informed decision-making. The diagram illustrates AI-driven fraud detection in 3 key steps. 1. Detection. AI scans vast amounts of data, identifies patterns, and flags unusual activities, such as sudden large transactions. 2. Investigation. Once an alert is triggered, AI assists in decision-making by generating reports and actionable insights. 3. Prevention. AI continuously learns from past fraud cases, refines detection models, and updates security rules to prevent future fraud. By leveraging AI and data visualization, businesses can proactively combat financial fraud, ensuring a more secure and resilient financial system. How AI helps prevent phishing and scams. Scammers often deceive people into sharing personal information through fake emails, messages, or websites. AI combats this by analyzing emails and detecting suspicious elements, such as fake senders, dangerous links, or unusual patterns. It continuously learns from past scams, improving its ability to identify new fraud tactics before they can trick anyone. By proactively filtering out threats, AI helps protect individuals and businesses from phishing attacks and identity theft. The role of AI in fraud detection. 1. Addressing identity theft. Identity theft is one of the most widespread and damaging forms of fraud, involving the unauthorized use of personal information for illicit activities. AI plays a crucial role in detecting and preventing identity theft by leveraging advanced analytical techniques. 2. Identifying anomalous behavior. AI systems analyze user behavior to detect deviations that may indicate potential identity theft. Key indicators include a. Unusual login attempts from unfamiliar locations or devices. b. Sudden and rapid changes in account details, such as passwords or email addresses. c. Transactions that deviate from a user's typical spending patterns. By utilizing machine learning, AI continuously refines its detection capabilities, identifying subtle anomalies that may signal compromised identities. This proactive approach helps financial institutions prevent fraud in real time, ensuring stronger security for users and businesses alike. The role of AI in fraud detection: combating account takeovers. Account takeovers are a growing threat in the digital age, where fraudsters gain unauthorized access to user accounts to commit fraud. AI plays a crucial role in detecting and preventing these attacks by analyzing behavioral patterns and identifying suspicious activities in real time. Behavioral analysis for early detection. AI continuously monitors user behavior to spot anomalies that may indicate account compromise, such as a. Sudden changes in login locations or devices. A login attempt from an unfamiliar country or device raises red flags. b. Multiple failed login attempts from different IP addresses. Repeated access attempts suggest brute force attacks. c. Unusual access times or transaction patterns. Significant deviations from normal behavior signal potential fraud. When such anomalies are detected, AI triggers alerts or implements automated security measures, such as blocking access or requiring additional verification, to prevent unauthorized takeovers. By leveraging AI-driven behavioral analysis, businesses can enhance security and safeguard users from fraudulent activities. AI plays a crucial role in preventing account takeovers by detecting unusual login attempts, repeated failed logins, and suspicious activities in real time. For example, if a user typically logs in from Mumbai at 9 a.m. but a sudden login attempt occurs from Russia at 2 a.m., AI recognizes this anomaly. It then takes immediate action, blocking access, flagging the attempt, or triggering additional verification steps to prevent unauthorized access. By continuously analyzing behavioral patterns, AI strengthens security, reducing the risk of account takeovers and protecting users from fraud. The role of AI in fraud detection: addressing card-not-present fraud. Card-not-present or CNP fraud is a major challenge in online transactions, where fraudsters misuse payment card details without physically possessing the card. This form of fraud is prevalent in e-commerce, mobile payments, and other remote transactions. AI plays a critical role in detecting and mitigating CNP fraud by analyzing transaction patterns and identifying suspicious activities in real time. Detecting anomalous transactions. AI examines vast amounts of transaction data to spot anomalies that may indicate fraud. Key indicators include a. Transactions from unusual geographic locations, purchases made from regions where the cardholder has no prior transaction history. b. High-value purchases inconsistent with normal spending habits. A sudden, significant increase in spending triggers suspicion. c. Multiple transactions in a short period. Rapid, repeated purchases may suggest fraudulent activity. For example, if a user typically spends 5,000 Indian rupees per month on online shopping in India but suddenly makes a 50,000 Indian rupees purchase from another country, AI recognizes this irregular pattern. It then takes immediate action, blocking the transaction, flagging it for verification, or alerting the user, effectively preventing fraud. By leveraging machine learning models, AI enhances fraud detection, reducing risks and ensuring secure online transactions for both businesses and consumers. AI techniques in combating cybercrime. AI techniques in fraud detection. AI employs multiple techniques to detect fraud, making the process more intelligent and accurate. 1. Supervised learning works like a trained security guard, learning from past fraud cases to recognize and prevent similar incidents in the future. 2. Unsupervised learning functions like a detective, identifying suspicious patterns and anomalies even if they haven't been flagged before. 3. Deep learning takes fraud detection to the next level by analyzing complex data, such as handwriting, biometrics, and behavioral patterns, to detect fake IDs or unusual activities. By combining these techniques, AI continuously improves its ability to detect and prevent fraud, ensuring enhanced security for businesses and consumers. Predictive analytics in cybersecurity. Predictive analytics enables organizations to stay ahead of cyber threats before they occur by leveraging data-driven insights. Two key techniques make this possible. 1. Predictive modeling analyzes past data to identify patterns and detect potential cyber incidents before they happen. 2. Risk scoring assigns a risk value to threats, helping prioritize the most critical risks for immediate action. By combining these approaches, businesses can shift from reactive to proactive cybersecurity, enhancing threat prevention and response efficiency. The role of natural language processing or NLP in cybersecurity. Natural language processing helps analyze vast amounts of text data to enhance cybersecurity efforts. It enables early detection of potential threats by understanding and interpreting language patterns. 1. Text analysis processes large volumes of text to identify cyber threats, phishing attempts, and malicious intent in emails, chats, or online communications. 2. Sentiment analysis examines the emotional tone in messages, such as social media posts, to detect suspicious behavior or emerging threats. By leveraging these NLP techniques, organizations can proactively identify risks and take preventive action before threats escalate. How deep learning enhances financial decision-making. Deep learning is revolutionizing financial decision-making by providing smarter, data-driven insights. 1. Beyond traditional credit scores. Instead of relying solely on credit scores, deep learning models analyze vast amounts of structured and unstructured data, including spending habits, income trends, and transaction patterns. 2. Neural network credit scoring model. Functions like a brain, connecting multiple data points to assess creditworthiness with greater accuracy. 3. Risk management heat map. Acts as a visual risk indicator, where green represents low risk, yellow signals caution, and red highlights high-risk cases. The best part is, these models continuously improve over time, reducing errors and enabling financial institutions to make more accurate, fair, and data-driven lending decisions. How fraud detection works. Fraud detection relies on analyzing past transactions to identify suspicious activity while allowing legitimate transactions to proceed smoothly. AI-powered systems examine patterns in data, such as transaction amounts, locations, and frequency, to detect anomalies. By continuously learning from past fraud cases, these models become more accurate over time, improving their ability to prevent financial fraud in real time. AI models in fraud detection. Fraud detection relies on advanced models to identify suspicious transactions and minimize financial risk. 1. Logistic regression acts like a fraud probability calculator, analyzing transaction patterns and assigning a risk score like 80% chance of fraud. It is most effective for smaller, well-structured datasets. 2. Support vector machine or SVM works by drawing a clear boundary between fraudulent and legitimate transactions. If a transaction falls on the wrong side of the boundary, it is flagged as suspicious. SVM is highly effective for structured data but may struggle with very large datasets. By leveraging these AI techniques, fraud detection systems become more precise, helping businesses prevent financial losses while ensuring smooth transactions for genuine users. Unsupervised learning, key focus, fraud detection. Problem statement. The goal is to detect anomalous transactions that could indicate potential fraud by identifying deviations from typical transaction patterns. Dataset requirements. Unlabeled data, historical transaction data without predefined fraud labels. Key features: transaction amount, time, location, device type, and user behavior. Objective: cluster similar transactions and flag unusual activities as potential fraud. Real-world example. Imagine a customer typically spends 2,000 Indian rupees to 5,000 Indian rupees on shopping within their city. Suddenly, a 50,000 Indian rupees transaction occurs from another country at midnight using a new device. Since this deviates from their normal spending pattern, the AI system flags it as suspicious, potentially preventing fraud in real time. Unsupervised learning applications for fraud detection. Unsupervised learning plays a key role in identifying fraudulent transactions without requiring labeled data. It helps detect unusual patterns and emerging fraud techniques. 1. Clustering. Goal. Groups transactions based on similarity. How it works. Legitimate transactions form dense clusters, while fraudulent ones may appear as outliers in sparse clusters. Example, K-means clustering. Partitions data into K clusters. Transactions that are far from cluster centroids may indicate fraud. 2. Anomaly detection. Goal. Identifies transactions that significantly deviate from normal behavior. How it works. Flags unusual activities directly by detecting deviations from expected patterns. Examples, autoencoders. Neural networks trained to reconstruct data, large reconstruction errors suggest anomalies. 3. Isolation forest. Randomly splits data to isolate anomalies, requiring fewer splits for fraudulent transactions than normal ones. By using these techniques, AI can uncover hidden fraud patterns, even those never seen before, making fraud detection more adaptive and proactive. Deep learning, key focus, fraud detection. Problem statement. Detect and classify fraudulent transactions within large-scale, high-dimensional datasets, often in real time. Dataset requirements. Label data, used in supervised deep learning models to differentiate between fraud and legitimate transactions. Unlabeled data, applied in unsupervised learning for anomaly detection, identifying unusual patterns without predefined labels. Key features, transaction metadata, including time, amount, user ID, location, device details, and behavioral attributes. How deep learning enhances fraud detection. Supervised learning, when labeled fraud data is available, AI models are trained to recognize and classify fraudulent activities. Unsupervised learning, in cases where fraud labels are absent, AI detects anomalies by identifying deviations from normal transaction behavior. Real-time analysis, by examining transaction details such as time, amount, and user behavior, deep learning models enable fast and accurate fraud detection. With these advanced techniques, fraud detection becomes smarter, faster, and more precise, helping financial institutions stay ahead of cyber threats. Deep learning for fraud detection in e-commerce. Step 1. Data collection. We gathered 500,000 transactions, each labeled as fraudulent or legitimate, containing key details like transaction amount, location, device type, and purchase time. The objective? Identify fraud patterns. Step 2. Data pre-processing. To ensure accuracy, we cleaned and prepared the dataset. Handled missing values, removed 3% of incomplete records. Standardized transaction amounts, normalized values for consistency. Encoded categorical features, converted data like device type into machine-readable format using one-hot encoding. Step 3. Model training. With clean and structured data, our deep learning model can now efficiently learn fraud patterns and accurately detect suspicious transactions, helping to enhance security in e-commerce. Fraud detection using the KDD cycle. 1. Feature engineering. Introduced transaction velocity to track rapid spending patterns. Applied principal component analysis or PCA to reduce dimensionality and enhance model efficiency. 2. Model development. Trained a recurrent neural network or RNN with long short-term memory LSTM for sequential transaction analysis. Data split, 70% for training, 15% for validation and 15% for testing. 3. Performance evaluation. Accuracy, 98.1%, high overall prediction correctness. Recall, 96.3%, effective in identifying actual fraud cases. Precision, 94.6%, low false positive rate. ROC, AUC metric is 0.987, strong capability in distinguishing fraud from legitimate transactions. With these results, the model achieves high fraud detection accuracy with minimal false alarms, ensuring robust security in financial transactions. Feature importance and anomaly detection in fraud detection. We used SHAP or S-happily additive explanations to determine which features contributed most to fraud detection. Key insights. Transaction amount. Fraudulent transactions were often small but repeated frequently within a short time. Transaction velocity. High transaction rates in quick succession were strong fraud indicators. Time of day. Suspicious activity spiked during early morning hours, outside typical user behavior patterns. Anomaly detection using statistical analyses. A Z-test confirmed a significant deviation, p less than 0.01, in transaction patterns between fraudulent and legitimate users. Fraudulent transactions showed distinct patterns, small but frequent, executed rapidly, and occurring late at night. By leveraging these insights, we enhance fraud detection accuracy, distinguishing genuine transactions from fraudulent activity with greater precision. KDD process for fraud detection. The image provides a visual representation of the knowledge discovery in databases or KDD process in fraud detection. It demonstrates how data is collected, processed and analyzed. 1. Collected, gathering transaction records, user behavior data, and fraud indicators. 2. Processed, cleaning, transforming, and selecting key features for analysis. 3. Analyzed, applying deep learning models to detect fraudulent patterns and anomalies. Fraud detection in FinTech. AI-powered fraud detection in FinTech. The FinTech industry has transformed financial services, making transactions faster, more convenient, and widely accessible. However, this rapid growth has also led to a surge in cybercrime, including fraud, identity theft, and data breaches. Traditional fraud detection methods struggle to keep up with evolving threats. This is where AI-driven fraud detection makes a difference. AI enhances security by offering 1. Real-time monitoring, instantly detecting suspicious activities. 2. Predictive analysis, identifying potential fraud before it happens. 3. Adaptive learning, continuously improving detection methods to counter new fraud techniques. Fraud detection operates in a continuous cycle, where AI refines its ability to identify, analyze, and prevent fraudulent activities, making financial transactions safer and more secure. The growing threat of cybercrime in FinTech. The digital transformation of financial services has expanded the attack surface for cybercriminals, leading to a rise in sophisticated fraud tactics. Some of the most common types of fraud in FinTech include 1. Identity theft, stolen personal data is used to access financial accounts. 2. Account takeovers, unauthorized access to user accounts for fraudulent transactions. 3. Payment fraud, manipulation of payment systems to divert funds. 4. Money laundering, concealing illicit funds within financial networks. Traditional rule-based fraud detection systems often struggle to adapt to evolving cyber threats, making AI-powered solutions essential for real-time fraud detection and prevention. Cybercrime trends in FinTech. Reports indicate that cybercrime in FinTech has risen exponentially since 2016, with both the number of incidents and financial losses surging. This underscores the urgent need for advanced AI-driven fraud detection to protect businesses and consumers. How AI is transforming fraud detection in FinTech. AI is revolutionizing fraud detection by analyzing transactions in real time and flagging suspicious activities instantly. Whether it's unusual spending patterns, multiple failed login attempts, or high-risk transactions, AI detects anomalies that traditional systems might miss. Beyond fraud prevention, AI is also enhancing loan approvals by considering more than just credit scores. It evaluates spending habits, transaction history, and behavioral patterns to make more informed lending decisions. By continuously learning and adapting, AI is making financial systems safer, smarter, and more efficient, ensuring better security for both businesses and consumers. Challenges in AI-powered fraud detection. While AI enhances fraud detection, it also comes with challenges that need careful consideration. 1. Privacy and compliance. AI must adhere to strict regulations like GDPR and CCPA to ensure customer data is protected and used ethically. 2. Bias in AI models. If training data is imbalanced or skewed, AI could make unfair decisions, leading to false positives or negatives in fraud detection. 3. Adversarial attacks. Cybercriminals are constantly evolving their tactics, trying to manipulate AI systems to bypass fraud detection. AI models need to be continuously updated to stay ahead of these threats. Addressing these challenges is essential to build a reliable, fair, and resilient AI-driven fraud detection system. This segmentation highlights how AI is shaping the fintech industry across different applications and regions. Key insights: solutions versus services, AI-driven tools for fraud detection, risk management, and customer support. Cloud versus on-premise. Cloud adoption is growing due to scalability and cost-effectiveness. Applications. AI is used in fraud detection, chatbots, credit scoring, asset management, etc. Global market. North America, Europe, and Asia-Pacific are key regions driving AI adoption in fintech. Steps to implement federated learning in fraud detection. 1. Model training on local data. Each fintech firm trains its own AI model using internal fraud data. 2. Sharing insights, not data. Instead of sharing raw data, only model updates, like fraud patterns, are exchanged. 3. Aggregation and improvement. A central AI system combines updates from all firms to improve the global fraud detection model. 4. Continuous learning. The model keeps updating as new fraud patterns emerge, making detection smarter over time. Real-world example: Mastercard's AI Shield uses federated learning to detect fraud across banks without sharing transaction details. Key AI techniques in fraud detection. 1. SHAP or S-happily additive explanations explains which features contributed most to fraud decisions like transaction amount, location, or time. 2. LIME or local interpretable model agnostic explanations creates interpretable approximations of AI models to explain individual fraud predictions. 3. Decision trees and rule-based models used alongside deep learning to offer human-readable fraud detection logic. 4. Counterfactual explanations helps users understand what-if scenarios, like if this transaction amount was lower, it wouldn't have been flagged as fraud. Real-world example: JP Morgan Chase uses SHAP to explain AI-driven fraud alerts to regulators and customers, making decisions more transparent. Blockchain-based fraud prevention, immutable security. Blockchain technology is transforming financial security by providing a tamper-proof, decentralized approach to fraud prevention. Its ability to create transparent and verifiable transaction records makes it a powerful tool in combating financial fraud. Key features of blockchain in fraud prevention. 1. Immutable ledgers. Every transaction is permanently recorded, time-stamped, and cannot be altered, making fraudulent modifications impossible. 2. Smart contracts. Automated agreements execute transactions only when predefined conditions are met, reducing human error and preventing unauthorized manipulations. 3. Real-time fraud detection. Blockchain's transparency allows financial institutions to track transactions instantly, flagging anomalies and preventing fraudulent activities before they escalate. By leveraging blockchain, fintech companies can enhance security, improve trust, and minimize fraud risks across digital transactions. Future outlook: empowering fintech companies. The future of fraud prevention in fintech lies in the seamless integration of AI, blockchain, and privacy-preserving technologies. As cyber threats evolve, these innovations will help fintech firms stay ahead of fraudsters while ensuring security and compliance. Key advancements in fraud prevention. 1. Proactive fraud detection. AI-powered predictive analytics and federated learning will anticipate fraud risks before they happen, reducing financial losses. 2. Enhanced customer experience. Real-time, transparent fraud detection will create smoother, safer financial transactions, boosting user trust and satisfaction. 3. Adaptive ecosystem. The synergy of blockchain and AI will form a self-learning system that continuously evolves to counter emerging fraud tactics, requiring minimal manual intervention. By embracing these cutting-edge technologies, fintech companies will fortify their defenses, streamline operations, and maintain a competitive edge in the digital financial landscape. The future of AI in fraud detection and cybersecurity. The future of fraud detection and cybersecurity. The next wave of innovation in fraud detection will leverage emerging technologies like quantum computing and blockchain to strengthen cybersecurity and financial protection. Key advancements on the horizon. 1. Quantum computing for real-time threat detection. With its immense processing power, quantum computing will analyze massive datasets instantly, detecting fraud patterns and cyber threats faster than ever. 2. Blockchain for tamper-proof security. Decentralized and immutable, blockchain will secure transactions by preventing data alterations, ensuring transparency, and minimizing fraud risks. 3. AI-driven adaptive security. AI models will continuously learn from new fraud attempts, making cybersecurity more proactive and resilient. These advancements will redefine fraud detection, making financial systems safer, smarter, and more reliable. Public-private partnerships, a unified front against cyber threats. The fight against cyber threats is more effective when governments, financial institutions, and private companies collaborate to share intelligence and resources. How public-private partnerships strengthen cybersecurity. 1. Information sharing for faster threat response. Just like a neighborhood watch, financial institutions and government agencies exchange real-time fraud alerts, helping each other detect and prevent cybercrime. 2. Joint cybersecurity initiatives. Public and private entities work together to develop advanced fraud detection systems and implement better regulatory frameworks. 3. Global cooperation for safer transactions. Cross-border partnerships ensure fraudulent activities in one region don't spread to another, making global financial networks more secure. Real-world example: just like shop owners warn each other about thieves, financial institutions alert their partners about emerging cyber threats, ensuring customers stay protected. Next-gen AI, smarter and more adaptive fraud detection. AI-driven fraud detection systems are constantly evolving to stay ahead of cybercriminals. Here's how. 1. Improved algorithms. Just like email spam filters have gotten better over time, AI models are now more precise at recognizing fraud patterns. Machine learning continuously refines itself, making it harder for scammers to exploit loopholes. 2. Real-time adaptability. Imagine a self-driving car adjusting instantly to road obstacles. AI fraud detection works the same way. It adapts in real time to new scams, ensuring threats are blocked before they cause damage. 3. Self-learning models. AI doesn't just detect fraud, it learns from past fraud attempts, making future detection even more effective. This proactive approach reduces false positives and ensures legitimate transactions go through smoothly. With these advancements, financial systems are becoming safer and smarter, protecting businesses and customers alike. Conclusion. The future of AI in fraud prevention, safer transactions ahead. Cybercriminals are getting smarter, but AI is evolving even faster. Here's how AI is shaping the future of financial security. 1. Real-time fraud detection. AI analyzes transactions instantly, blocking suspicious activities before they cause harm. 2. Continuous learning. AI learns from past fraud cases, adapting to new scam techniques and improving over time. 3. Stronger security with blockchain. Future fraud detection will combine AI with blockchain for tamper-proof transactions, making it even harder for cybercriminals to succeed. Fair and transparent AI. AI will become more explainable and unbiased, ensuring fair decision-making while complying with regulations. The goal? A fraud-free financial system. With AI on our side, digital payments will be safer, customer data will remain secure, and fraudsters will have fewer opportunities to exploit weaknesses. Thank you all for your time and attention. We have explored how AI is transforming fraud detection and making financial transactions more secure. The future of fintech is bright, and by leveraging AI, blockchain, and real-time analytics, we can stay ahead of cyber threats. Let's work together to create a safer, fraud-free financial ecosystem.